Hello everyone, welcome to Rajeshwari's Commerce and Management Study Up. I am Rajeshwari here. Let us discuss today question number 9 from 2021, section B, ratio analysis. With the help of the following ratio regarding Galaxy Film, draw the balance sheet of the company for the year 2018. Current ratio 2.5, liquid ratio 1.5, net working capital 3 lakh, stock turnover ratio, cost of sale divided by closing stock is 6 times, gross profit ratio 20%, fixed asset turnover ratio on cost of sale 2 times, debt collection period is 2 months, fixed asset to shareholders net worth is 0.80, reserve and surplus of capital 0.50. Let us calculate first current ratio. Current ratio. What is the formula for current ratio? Current assets divided by current liability. Current liabilities is current ratio. And working capital is given. So what is the formula for working capital? Current assets minus current liabilities is working capital. Here working capital is how much? 3 lakh. The current ratio is how much? 2.5 minus current liability is 1. We know 2:1. What is the ideal ratio for current ratio? 2:1. So 2.5, the current assets minus 1. What is the remaining? 1.5. Current assets minus current liabilities. Working capital is 3 lakh. Now 3 lakh is equal to current ratio is, current asset is 2.5, current liabilities is 1.5 in 2.5 divided by 1.5 into 3 lakh. Let us calculate. 2.5 divided by 1.5 into 3 lakh. That is 4,99,999.99 is there. So we'll make it as 5 lakh. 5 lakh. Now this 5 lakh is total current assets we have found. What is our current liability? Current liabilities is equal to 1 divided by 1.5 into 3 lakh. 1 divided by 1.5 into 3 lakh. 1,99,999. So it is 2 lakh. 2 lakh is the current liabilities. Current asset is 5 lakh. Current liabilities is 2 lakh. We have calculated. Now current ratio is given. With the help of current ratio and working capital, we have calculated the current assets and current liabilities. The next one is liquid ratio. Liquidity ratio. I have done detailed video on ratio analysis. If you have not watched that, watch that video. What is the formula for liquid ratio? Current assets minus stock divided by current liabilities. Liquid ratio is given, that is 1.5. We don't know what is stock, but we know total current asset, that includes the stock also, minus stock divided by current liabilities also we have calculated, that is 2 lakh. Right? Now 1.5 into 2 lakh is equals to 5 lakh minus stock. 1.5 into 2 lakh is 1.5 into 2 lakh is 3 lakh is equal to 5 lakh minus stock. Minus stock. Now stock is equal to 5 lakh minus 3 lakh. Stock is how much? Stock is 2 lakh. 2 lakh is stock. Right? Let us calculate now. Liquid asset is total current asset is 5 lakh. Stock is 2 lakh. 3 lakh is liquid asset. Then next, let us find out the stock turnover. Stock turnover. What is the formula for stock turnover? Cost of sale divided by stock. Stock turnover ratio is given, that is 6, and cost of sale we have to calculate. We don't know cost of sale, but stock we have calculated, that is 2 lakh. Stock is 2 lakh. Then cost of sale is equal to 2 lakh into 6. Cost of sale is 12 lakh. 12 lakh. Then next is, let us find out the fixed asset. Fixed assets turnover. Whatever order the question is asked, the same order we are solving the question. The formula for fixed asset turnover is cost of sale. It is link between each ratios. See, here stock we have calculated from liquid ratio. Then we have used it for the stock turnover. Now cost of sale we calculated, that we are using for the fixed asset turnover. Cost of sale divided by fixed asset. Fixed asset we have to find out. Fixed asset turnover ratio is given, that is 2. Cost of sale is 12 lakh divided by fixed asset. Divided by fixed asset. So fixed asset is equal to assets is equals to 12 lakh divided by 2. Fixed asset is 6 lakh. 6 lakh. 6 lakh is fixed asset. Now let us find out the fifth one. After stock turnover ratio, we have gross profit ratio. Let us assume sales is 100%. Then the cost of sale. Cost of sale. If sales is 100%, cost of sale will be 80, because gross profit they said it is 20%. Gross profit percentage is given. So gross profit is 20%. Then cost plus profit is equal to, we will get sale. Right? Cost is 80 plus 20, then it will be 100. Now let us find out the gross profit ratio. Gross profit ratio. Gross profit ratio, gross profit divided by sales into 100. Gross profit ratio is given that we have to find out sales is equal to 1 divided by cost of sale 0.80 into 12 lakh into 12 lakh. Let us calculate this. 1 divided by 0.80 into 12 lakh. 15 lakh is the sale. Sales is how much? Sales is 15 lakh. Now, debtor turnover ratio. Debtors turnover ratio. Debtors is equal to debtors by sales into given period is 12. A month is given, so we are taking 12. Here it is. Debt collection period is 2 months. 12. Debt collection period is 2. Debtors we have to find out, divided by sales is 15 lakh into 12. Now 2 lakh into 15 lakh divided by 12 is equal to, debtors is equal to 2 into 15 lakh divided by 12. 2 lakh 50,000 is debtors. So for balance sheet, whatever items we required, we are calculating. 2 lakh 50,000 is debtors. Then next we let us calculate. Now cash we will calculate. Cash is equal to, from current assets, already we calculated stock, debtors. These two we calculated. If you minus these two, we will get cash from the total current assets. Cash is equal to, total current asset is 5 lakh, stock is 2 lakh, debtors is 2 lakh 50,000, then cash is 50,000. Cash is 50,000. The next is, we have fixed asset. Fixed asset to shareholders net worth. Fixed asset divided by shareholders fund is equal to 0.8. It is given in the question. And fixed asset we have calculated. What is the fixed asset? Fixed asset is 6 lakh. We have calculated already fixed asset here. Fixed asset turnover. Fixed asset is 6 lakh. 6 lakh divided by shareholders fund is equal to 0.8. Now we want shareholders fund is equal to 6 lakh divided by 0.8. 6 lakh divided by 0.8 is 7 lakh 50,000. Shareholders fund is how much? 7 lakh 50,000. 50,000. Now let us calculate reserve and surplus. Last one, reserve and surplus. Reserve and surplus divided by capital equals 0.50. Reserve and surplus is shareholders fund minus capital divided by capital is equal to 0.50. Shareholders fund already we have calculated, that is 7,50,000 minus capital is equal to 0.50 into capital. Now 7,50,000 0.5 capital, that is multiplied, and this crosses the equal becomes plus capital. 7,50,000 is equal to 0.5 plus 1. In mathematics we'll consider this as a 1. So 1.5 capital. 1.5 capital. Capital is equals 7,50,000 divided by 1.5. 7,50,000 divided by 1.5 is 5 lakh. 5 lakh is capital. Now we will find out reserve and surplus. Reserve and surplus is equal to shareholders fund minus capital. Shareholders fund is 7,50,000 minus capital is 5 lakh. Reserve is 2,50,000. 2,50,000 is reserve. Let us prepare the balance sheet. Balance sheet. Liabilities. Assets. In assets, first we calculated fixed asset 6 lakh, stock 2 lakh, debtors 2,50,000 and cash 50,000. And here share capital is 5 lakh. Reserve and surplus 2,50,000. Then long term borrowing, it is not there. Current liabilities is 2 lakh. Total is 6 lakh plus 2 lakh. 2 lakh 50 plus 50,000. It is 11 lakh. 11 lakh. Here it is 5 lakh. 2 lakh 50 plus 2 lakh. 9 lakh 50,000 is there. Minus 11 lakh is 1 lakh 50,000 is balancing figure that we are considering as long term borrowing. It is 11 lakh. That's it. I hope you all understood. First you have to calculate the current ratio. Current ratio is given and working capital is given. Working capital is equal to current asset minus current liability. The 2:1 ratio, that is 2.5 the current assets minus 1 will be current liability. Then your current liability becomes 1.5. 3 lakh is working capital. 2.5 divided by 1.5, that is total current assets you will get 5 lakh. Current liabilities is 1 divided by 1.53 into 3 lakh. If you do, you will get 2 lakh as current liabilities. Liquid ratio is current asset minus stock divided by current liability. Already we have calculated current asset 5 lakh and liquid ratio is given, that is 1.5 minus stock divided by 2 lakh. Cross multiplication, 2 lakh into 1.5 is equal to 5 lakh minus stock, that is 3 lakh. Then 5 lakh minus 3 lakh, we will get stock 2 lakh. Then we have calculated the liquid asset. Liquid asset 5 lakh minus 2 lakh, then it is 3 lakh. Stock turnover ratio is cost divided by cost of sale divided by stock. So turnover ratio is given 6. Cost of sale we need to find out. Stock we know already 2 lakh. Cross multiplication, cost of sale will becomes 2 lakh. 12 lakh it is. Sorry. Fixed asset turnover ratio is cost of sale divided by fixed asset. Cost of sale already we have calculated. Divided by fixed asset turnover ratio, we'll get fixed asset 6 lakh. Then sales gross profit is given as 20%, then cost of sale becomes 80 because sales will be 100. Cost plus profit is sales. That is why cost will assume as 100 and cost of sale is 80. So the sales is equal to 1 divided by 0.80 into 12 lakh is sales will become 15 lakh. Debtor turnover ratio is given, that is 2. Debtors divided by sales into 12 months. Debtors we need to find out. Sales we have already calculated, that is 15 lakh. 15 lakh into 2 cross multiplication divided by 12, debtors will come 2,50,000. Then we need to find out cash. Current assets minus stock minus debtors, if we do from total current assets we will get cash because cash is also an current asset. Then we need to find out the capital. For that, fixed asset divided by shareholders fund. Shareholders fund net worth is given, that is 0.8. 6 lakh is the fixed asset. 6 lakh divided by 0.8, shareholders fund is 7,50,000. Then we are finding the reserve and surplus. Reserve and surplus divided by capital is 0.50. Shareholders from total shareholders fund, if you minus capital, we will get reserve and surplus. We need to find out capital first. So shareholders fund is 7,50,000 minus capital. Cross multiplication, 0.50 into capital. 7,50,000 is equal to 0.5 plus capital. This minus becomes plus. And this is 1. It is considered as 1. 0.5 plus 1 is 1.5 capital. Capital is equal to 7,50,000 divided by 1.5 is capital 5 lakh. Then reserve and surplus is from shareholders fund. If you minus capital, we will get reserve and surplus. With the help of all these things, we have prepared the balance sheet. The balance sheet total is 11 lakh. Thank you. Have a great day.